It's Doug McIntyre, the editor in chief at 24/7 Wall Street. And I'm here with Lee Jackson, who is our senior editor for all things that have to do with the stock market, finance, publicly held companies. We're going to talk a little bit today about whether the market has really run its course. And if it has, is it one of the things where you have sort of a gradual tapering off, which has happened before in history? Or do you have one of these, resets that's like 15% in a couple of days? So we'll look into that. So, Lee, here's my observation. This is unprecedented. I mean, there's some cases in the past where you've had really great aggressive market runs, but this has been fueled by seven stocks, the magnificent seven, as you call them. But one of the things is that group has started to thin out, and you're seeing really big market movers that have carried a lot of this on their shoulders, particularly Apple. There's some other ones like Tesla, but once Apple, which was the number one market cap company for a long, long time, starts to really die out as a market leader, you've got an AI driven stock market. So where does that leave us?
Right. Well, this kind of huge run up has happened, but it's only been a few times over the last, say, 40 years. And the Magnificent Seven was kind of morphed from the old FANG rally that kind of started in 2020 and 21, which was, it was Facebook, Apple, Netflix, Google, other names for those stocks, of course, now, but that's kind of morphed into this. And the difference between now and, say, 2000 and 1999 is at least the AI stocks that have bled everything higher, at least they make some money. But they're now, even NVIDIA is trading at a huge, huge multiple. And even it's starting to run into a wall.
Yeah, it's starting to run into a wall. Some of the things, as you know, that make the market collapse have nothing to do with stocks or publicly held companies.
Right.
There is certainly a threat right now, particularly in the Middle East, that you could have some real geopolitical ugliness.
Yep.
It isn't just that the market gets nervous about those things. Usually, big problems in the Middle East affect oil prices. So,
Right.
Everybody says, well, inflation is tamed, it's going down, but the Fed is not quite there yet. They're still, pushing the question about rates further and further into the year. If you have real problems that cause inflation to come back, even if it's just energy based, that by itself could cripple this market badly.
Oh, absolutely. And I think there's a good chance that a summer hike, which was kind of built in after they paused last month, that could get moved to the fall. And Powell is going to be very reluctant to lower rates in the fall in front of the election.
Yeah, you don't want to be the spoiler. You don't
Right.
want to be the Fed chair who decided that he was going to affect the election.
The
So I
election,
think
right.
you're right. I think if you get to August, September, they're just going to leave it alone and say, we can be
They'll wait till
aggressive
after
at
the
the end of the year.
election. Right.
They'll
Right.
wait till the end of the year. Uh, Now, of course, we have earnings. People sometimes forget that there's earnings and that
Yeah,
they
there
have
is.
anything to do with stock prices. But um, I would think that Apple could be pretty rough. I understand it's done badly, but if Apple does badly, it will still be considered a bellwether. I know it's not an AI based stock, but Apple has still been a really, really big lifter of this market. If you see any weakness at all as you move into Microsoft and Alphabet, I think that's another thing that could trigger a big sell off.
Yeah, absolutely. And remember, the big shareholders are not mom and pop accounts. The big shareholders are BlackRock, Fidelity, Vanguard. And if they see it going wrong, they will pull the ripcord on anything and, take down 20% of their position, maybe more. It's because they probably have huge gains.
They have huge gains. And look, so do individuals. I
Yeah.
mean, there's a point at which, unless you're incredibly greedy, if you've held a stock and it's up 60% and you smell a sell down, I think those people say, well, I'm going to lock in my 40% before it becomes you know, 20%. So I think you could see a lot of people hit the exits
Yep.
if it looks like the market is going to start to sell off. And as you know, one huge reset in a day, which you and I have seen happen,
Indeed.
that causes a panic. And you and I have seen that happen. People
Yes, we
say to
have.
themselves, if I've got a day that's down 15%, it means there could be another day that's down 15%.
Right.
So,
And people don't want to be, there's two things you don't want to do when trading stock: be the last one in and the last one out.
yeah, listen, it's very true. Well, look, we'll come back and we'll revisit this in 2 or 3 weeks. We'll have some earnings in. We'll know a lot more
Yeah.
about the Middle East. So we'll have information that we're guessing at. So
Right.
we'll come back soon and we'll fill everybody in on what's happened and what we think that means for the market. So
Let's do it.
take take care of yourself, and I'll talk to you very soon.
Thanks, Doug. Good to see you.